A lot of you have seen the stock market doing some sideways movements. Crypto's done some sideways movements. And as real estate investors, we don't get as much visibility to what is happening in our market. Although all of the signs are there that we are currently in the middle of a correction, you won't physically see prices changing for likely another 2 years, the earliest. But that doesn't mean that the market isn't already crashing. We're already showing signs. We're already in the middle of a correction, and maybe not in the middle, but we're right at the beginning. A sign the fact the market already started correcting last year and started slowing down. So doing this call is really about what do you do during a correction in real estate? What do you do when stock market crashes, the crypto market crashes? What do you do to save yourself and your family? And what is the best alternatives to be moving into? I've got Mitch jumping on the call a little bit later. He'll kind of give us a little guide on what's going on with the stock market, what's going on with the crypto market. But for now, I'm going to give a little bit of information on the real estate market, why it's doing what it's doing, how that kind of works, and then what we do as investors to make sure that we're on the right page. This is a great time. Hands to the camera if you've been hoping for a market crash. As real estate investors, you've been thinking, man, I hope it crashes, prices will come down. So we as investors talk about it all the time, but unfortunately, most investors are not currently positioning themselves to survive a true crash, true correction. Even with the next 2 years going, this is really time for caution and a time for taking risk off the table, because real estate takes a little while to do that. It's also, if you're an investor who's picked up a bunch of real estate, this is a time for selling the dogs, selling the things that don't cash flow. Again, risk off. This is not a good time to be flipping single family homes with too much leverage. What's up, Jillian? It's good to see you. Catherine, Melanie, Matt, Camille, Paula, Frank, John, Silvio. It's good to see everybody. Abby, I know you're on here. Kevin, I know you got your camera off. Is there anybody I missed? Rosie, Matt, camera on. No, Matt driving. Gotcha. Awesome. So as a team, there are some things that we can do to increase our likelihood of survival. The first is cash. Answer the camera if you know cash is important in a down market. Let's put it that way. Answer the camera if at the same time you've always been told put your cash to work. Don't put cash in the bank. Cash is trash. Who's been told that as well? Excellent. These are conflicting ideas. As real estate investors, we do make really good money when our cash is in investments, and that is important. And I genuinely, for the last 8-10 years, have done that because it's been the right move. The right move has been take my cash, pile it into something. These next 6 years, the move is a little different. You want to pile your cash into the bank over the next 6 years. As somebody who has always borrowed other people's money, I'm supposed to say the opposite thing, right? As somebody who raises capital and goes out and wants people's money in my pocket or in my investments, I've always said, cash is trash. It's burning a hole in your pocket. Inflation's eating away at your dollar. And that's the message that you're going to continue to hear from a bunch of jackasses who want your money in their pocket. Hands can't recognize there may be people out there who are less interested in protecting your money, more interested in increasing theirs. Excellent. We're not enemies with these people. Sometimes they just don't know. They've been on this train. It's been proven for so long that they don't see what's coming happen. And that's okay too. For the ones who do it intentionally, taking on more risk for investors, those are the ones I despise, and I think they'll deserve a place in the market, and yet there will always be a few. So for you, I want you to pay attention when you're out there and if somebody's bringing something to you, or if somebody's bringing something to a friend of yours. Please, in the past, I'd say let people make their decisions, but going forward, I'd say maybe you should pay attention to what's going on and make the offer to review a deal for somebody, and just ask a couple of questions. What if the market drops 20%? What if they aren't able to do a refinance because lenders are not lending out by the way, lenders don't lend in dark times. When there's depreciation in the market, lenders do not lend money. They hold it tight because they're getting called. They're getting their notes called. They're getting people not pay their bills. So lending gets a little bit tight. Anybody who thinks they're going to do a refinance 2 years from now is delusional. Or you may be able to pull it off, maybe, but the odds are going to go down significantly. So again, risk off. There is another component that we all hear as investors, and that is debt is good. Right? I've been one of those. These last 10 years, I've made my money from debt, from borrowing money and slamming it into assets. I still strongly believe in debt, but only certain types of debt in a market like this. And the short-term loans are something that I'm not a huge fan of unless you've got a cash flowing asset that can support the debt for a long period of time. Assets like that would be 3 families, 4 families, 10 units, 20 units, passive, like cash flowing assets. If you had an Amazon store that's driving traffic, sales, great. As long as it's something you could pay off immediately, it didn't require a refinance. And I'll tell you a little story about that. So during COVID, the lenders acted a lot like a financial crisis. And in that time, Ron and I had about $2.5 million in 12% interest, which was no big deal because we knew we were going to do a refinance. This was 2019. We had taken on all this debt, but we are the players. We're like, yeah, this ain't shit. We're going to be perfectly fine. In early 2020, we went to do our refinance. We were supposed to be fine, February, just refi out. So that $25,000 a month payment should be able to go down to a $12,000 a month payment at, 4 or 5% interest. Unfortunately, during COVID, all lenders locked up. Very similar to what will happen in a market crash. All lenders locked up. Nobody was touching commercial loans. Real estate was dead to them because of the moratorium. They were scared about the consequences of all of the actions the government and the president was making. So for 14 months, Ron and I hung into a $25,000 mortgage on a portfolio that shouldn't be able to sustain a 12% interest rate. So we went and we raised capital from investors. We took out more debt, more 12% interest debt. We took out, I want to say $240,000 just to pay debt for 14 months. And fortunately, we had the equity to do that. We sold 2 condos to justify. We sold a condo for $90,000. We sold a condo for $100,000. So we were able to reclaim and recoup and move with the market. If you don't have the inventory to do that, you shouldn't be taking 12% interest debt on. Does that make sense? We sold those condos at a steep discount. We just locked one up for $155,000. We locked another up for $185,000. So we sold those condos almost at half what they could have been sold for because we were in a desperate spot. We had investors to pay. And by the way, investors always come first. Your first priority, you take somebody else's money, you pay it first. This is how we operate in this community. Outside of this community, that's why we're very scrupulous about other investors. And if you hear someone investing with somebody else, please, again, review the deal for them. Review the investor. Have they consistently paid their bills? New syndicators, new investors, I am absolutely cautious on, even within our community, right? If somebody wants to invest with somebody, I ask them to talk to me first, talk to one of the other coaches first. But new investors, especially going forward, are something that I would be very cautious of, especially lending your money or lending other people's money. Make sure that you're reviewing deals for family, friends. You're gonna have a lot of people coming out of the woodwork. Man, like, this is a great opportunity. This is a great opportunity. This is a great opportunity because they just learned about syndication or they just learned about, flipping property without somebody else, without their own money. Because you're going to see a lot of gurus have been teaching for the last 8 years, 10 years, but that teaching is only now hitting this huge audience, way bigger than it has been in the past. And this huge audience is now coming out peddling deals. So again, be careful of the wolves in sheep's clothing. They look like us, they sound like us, but they are not us. And this is not the time to be doing the things that we've been doing over the last decade. This is a different time. Now, let me see. So that's a story. Oh, success story. So it did work out. Ron and I did refinance, 5% interest, got down to the 12,000, fortunately, but it's a painful situation because in the correction we see coming, you're talking about a 6-year drop, not a 2-year drop. So we were able to sustain for 14 months. Any investment that you do, could you sustain it for 6 years without having an equity play, with having to sell property at a discount if you needed to cover deals, or could you raise enough capital or increase your rents enough to justify 12%? If you're in 12%, or if these investors are in 12%, can they sustain a 6-year version of not hitting your refinance? That's a question that I don't believe most investors can say yes to. So and as I'm going, just write these down. These are just qualifying questions for deals, for your own deals, as you're borrowing people's money. And I'm not saying don't. What I'm saying is do it intelligently and don't borrow at 12% if you can avoid it. If it can be avoided through an equity play, do the equity play. Give the money away, but don't take on that extra risk. Here's the next one. Flipping in this market could be great, could be shit. We don't know. Anytime you flip in this market, you're taking on massive risk. The market takes 6 months to turn. It takes 6 months for us to notice a turn. in prices. So in that 6 months, you can be operating perfectly normal, smoothly, bought the deal. It looks like, market's still going up price wise, and you start your renovation and you put it on the market 3 months later, 4 months later, 5 months later, and the property doesn't sell. So the first thing you do is price drop, improve pictures, maybe change the description a little bit and do a little price drop. And if you hit the market at the wrong angle, you could be price dropping for 6 months, 8 months, a year before you finally realize it's time to rent this thing out, because you're going to sell it for less than you can get for what you spent on it or put into it. The way the market drops when it drops is painfully aggressive. In 2008, the market turned and people tried to chase the market for 4 years, and there were houses sitting on the market for 2 years, 3 years. People pulled off, went back on, and it's only to discover that the prices that people wanted were even lower. There's a good chance the market won't act quite the same way, but it will be close. It'll be something similar. In 2028, 2026, we will be exactly 18 years from the 2008 crisis. That puts us right in the prime spot for the 18-year cycle to continue, which is enough time for a new generation to make all the same decisions, same mistakes as generation prior to them. We're coming up on that. 2026 would be what I would say is midway down or middle of that market, which means 2024, 2023 even could be the beginning of that crash. Real estate crashes slow, does not crash fast. It is a slow product. In 2006, 2007, there's a good chance we're still in a crash. Remember, 2008 to 2012 was the downward slope of real estate. Has anybody ever looked that up? 2012 was the bottom. It wasn't 2008 for us. The stock market went and did its thing, which was basically like a signal. But our market was dropping from 2005. It was slowing down. In 2005, prices hit their peak. In 2007, 2008 is when they really started coming down. But they didn't stop dropping until 2012 in most markets. So we have a very long process with our slowdowns. Real estate doesn't just drop like the stock market overnight, but it does trail because of the way we drop our prices. So when he's dropping a price, let's bring it down, 1%. So let's bring it down $10,000, bring it down $10,000, bring it down 10, and you could be chasing $10,000 every month as the market's coming down that 1% every month. It's scam if you understand how that works. It makes sense. That's how the market drops. Awesome. Mitch, I'm slaying him with some doomsday stuff. I promise.
Why gotta be so negative, bro?
What is it?
Why gotta be so negative, bro?
No, honestly, this is just a pulse. It's not negative or positive. It's just a pulse. What is coming, and we're going to share how to survive during a market correction if it's here. Again, all I'm looking at are statistics and warning signs, and they are consistent with a correction. And I think that each one of us kind of feels like we've kind of had a long bull run anyway. We've had a really good chance with real estate. If we didn't capitalize on real estate in this last run, it's okay. There are other opportunities, other vehicles available to us that we're going to be looking at. And I'll talk more about those towards the end of this call. Before we do that, let's go into a little more doomsaying. Mitch, can you share what's going on with the crypto market?
Doomsday. I'm excited. It's buying season. This is weird. I'm usually the one that's like with the bearish outlooks, and I'm all like optimistic. Is this backwards day? Yeah, obviously crypto has been going down with the stock market. I do not expect that to change over the coming months. I'm looking at it as a buying opportunity for the long term. I'm actually excited, but I know that's probably backwards because things are going down, but I like buying things on discount, and I can't do that with real estate really anymore. So at least I can do it with crypto. I really don't know what to say in terms of overall outlook. Right now, stock market is very correlated. Crypto market is very correlated with stock market still. I think that's going to hold true until we see a recession. And then maybe at that point, we'll see people look at crypto as a true alternative investment, kind of like they do with gold. The old school people are buying more gold and silver right now to mitigate their stock market exposure or put their money somewhere. That's not going to happen with the, younger and newer generations. They're going to look to crypto for that same thing. I don't look at Bitcoin as a replacement for gold. I look at it as a sibling of gold because it's going to fill that same need, that same mindset, but it's going to do it for specific generations. And I don't know that, gold's just going to like magically go away at some point. It's just going to be like Bitcoin. So I look at that as a sibling, but Bitcoin is, a fraction of the market cap that gold is. At some point, maybe it'll be equivalent to it. I don't know. But right now it's a fraction of it. So even if it ends up being a third as valuable as gold in terms of overall market cap. That still bodes well for crypto. I will say this, it's like anything else with stocks, when stuff's ugly, you want to buy, kind of like the old reliables. So with stocks, a lot of people, like fleet of the blue chips and staples and utilities and things like that. I think that holds true for crypto. So right now, so far, all I've bought is Bitcoin in this pullback. Surprisingly, I even surprised myself, actually. That's not to say that, gambling on some altcoins isn't a good idea, but just in the end, Bitcoin's kind of the quote unquote blue chip. It's old reliable. And, you might not get, not financial advice. Anyway, yeah. So like I said, Bitcoin is kind of the same thing. It's that blue chip. So kind of playing it safe where I'm adding to my Bitcoin holdings while Bitcoin is on sale and continues to be on sale. My personal opinion is that it's going to go lower. And I'm actually hoping it does because I want to buy more lower. Love to buy some more, in the mid low 20s. If it gets there, I really don't care what happens because any Bitcoin I'm buying, I'm looking at as a 3 to 5 year hold. Same I do with real estate, like I'm still buying real estate, I'm closing on a deal next week. And as long as it cash flows, right? Do I think the price of that property is going to go up over the next 5 years? Absolutely freaking not. Do I care? Not at all because it cash flows. And that's what I'm in the business of, long-term buy and hold and let that equity build from principal pay down. The beauty about real estate, I could sell for the same price technically 30 years later, yet make the equivalent of what I bought it for because someone else is paying off my mortgage. That's why, real estate, I think, is that favorite investment for a lot of people, including myself, as much as I love my crypto. But just play it smart, dollar cost average. I think we're in a buying season right now for Bitcoin and crypto on a whole, but I don't think it's time to go all in. It's all about buying in phases, hence the dollar cost average. Make your life easy, kind of just set up a game plan if you do want to, get more exposure to crypto and just slowly make your purchases. Same as you would do if you want to, get more exposures. Like, let's say you love Tesla at these prices, right? And you don't care if Tesla is going to go down. Do you buy like your entire nut right here? Like, no, you buy like whatever, let's say, 20% and then have orders in to buy it as it goes down if it does. And if it doesn't go down, who cares? You still got a decent purchase that you're up money on, but you're also not putting yourself in a position to get wrecked in what is potentially a weak market, right? So it's all about understanding the pulse of the market, what kind of market we're in right now. So there's markets to be aggressive in, there's markets to be conservative in, but the underlying point is you still need to take action. There's still always opportunities to invest.
The biggest lesson that I learned in 2006, 7, 8, 9, 10, 11, 12 was that people who sat on their cash were idiots. Cash, good. You want a good cash position, but you want to be able to invest in things that make sense, like cash flowing things. So that brings me back to the way I started this. Cash is king, right? Cash to the bank, but cash is trash. This little devil of a dichotomy that we have in our investment world. In 2006, 2007, 2008, there was an asset class that made a lot of sense to invest in. There were things that were doing absolutely amazing, that were absolutely crushing it. Some of those things would be Airbnb. If you invested in Airbnb in 2008 when it launched, you'd be well, it depends on how much you put into it. You'd be a billionaire today. Same with Tesla. Tesla came out in 2005, 6, 7, in that ballpark. So investing during a recession, certain things made a lot of sense. Real estate class, there was opportunity in the multifamily sector in 2006, 2007 in the Midwest, not on the coastlines. Right now in real estate, the Midwest makes sense, not the coastlines. See, the coast is where prices go up and prices go down. The Midwest is where prices go sideways. At all times, the Midwest is boring, so you can truly buy for cash flow at the Midwest. Any time of the year, Mitch, correct me if I'm wrong, but any time of the year, any season in the cycle, Midwest goes up and down 4 or 5%, not much.
Yeah, you always have less volatility in the Midwest because generally cash flow markets.
100%. So there is a market out there right now that makes sense to invest in. There are a series of them, but if I were to, broad stroke it and say there's one market, it would be the Midwest. I would say Midwest, not the southern states. Southern states are pretty hot right now. They might have overheated to the point where they don't cash flow. But that Midwest, think of it like a big circle that bordered by Canada, that makes sense to invest in. All of the other coasts, you can still make money. By the way, I could have still made money in Fall River in 2005, 6, 7, 8 if I was a sniper shooter, just like I am in Fall River right now. Like I can still do deals all the way up and all the way down because I've got that sniper lock on that market. And I have the connections with people who are going to be desperate no matter what's happening, who would take my offer no matter what's happening. Whereas on MLS, you can see there's no deals in Fall River right now. just wiped out. In fact, most of Massachusetts, no deals on the market. So like there will be like stories of people crushing it in hot markets. Always will be. Right? There'll be people who get lucky in hot markets. There are three types of property that fail every time the market turns. The first are condos. The second is luxury, and the third is new construction. We have new construction developers pulling back. Sentiment on new building on builders has pulled back considerably starting in 2001. 2002, the prognosis looks even worse with interest rates going up. So you're seeing new construction and building slowing down. We did not catch up on our supply and demand issues through COVID. We did not catch up on how many builds we needed to do, but builders are slowing down. They got burned in 2006, and so they're making sure that they don't get burned in 2022. That sentiment is important because without them building, yes, materials are up, labor is up, the cities are not approving things. Major cities are just a pain in the butt to build in. So there's a lot of challenges that developers are facing on top of an uncertain market. So you're going to see them pulling back. You're going to see, and that could help us with the inventory shortage. Also, I said this on a video a while back with Mitch and Mike. We were on a call. Inventory did not decrease over the last 6 years. Demand increased. We have sold more houses per year over the last 6 years that almost double what we were selling in 2006. And the reason being is we've got two generations fighting for the inventory right now. So everybody's been telling you there's an inventory shortage. That's not the case. We're selling more inventory than we usually do. The last 6 years have been us selling more inventory than usual per year, but there are more people in the market per year. So it is not a supply issue. It is a demand issue. Now, when that demand drops off, then we have a surplus of supply again. Currently, we have more people buying real estate in the United States and all across the world than we have in the past. And the reason being the X generation, Gen Y, they have gotten to the age where they flip their house, right? That is around mid 50s, where you sell your starter home and you buy your secondary home. It could be mid 40s, mid 50s, because the average person buys their first house at 36. So figure 7 years later, they've now time to rotate. So they're rotating their inventory out. Millennials are buying their inventory, but the baby boom generation's holding their inventory. So we're at a timeline where the millennials and the baby boom generation should be typically trading off inventory, but they're not, because baby boomers are living longer. They should have passed already, but they are not. They're still here with us, which thank God, right? We all love our parents. Let's give them all a round of applause. We're still sticking around. And my grandparents passed a little earlier than they should have, but 79 is the average age that a boomer is going to live. So they're here a little longer than they should be, which is good. But for inventory, not good. So millennials are looking for their houses. They're not selling. Prices go up because demand is there. Very soon, the millennials will have overpaid for the properties they're buying. Gen X will have overpaid for the properties they're buying. And the baby boomers will be putting their houses on the market. Biggest generation that we've ever had, besides the millennials, will be putting all their houses on the market in a time where the millennials don't need anymore. Gen X doesn't need anymore. In fact, Gen X will be continuing to sell their houses to downsize. And when they're going to sell to downsize, they're going to be buying what the baby boomers are putting on the market. And they're going to be, but the millennials won't be there anymore. They won't be buying. So you're going to end up having a series of glut inventory on the market, because the Gen X is a smaller generation, by the way. They're not as much as the baby boom or the millennials. We're also moving into something called a renter nation, where everybody rents. You have a lot of millennials who are like, I don't want to own a home. I just want to live wherever I live. I don't know what I'm gonna do for a living. I got to bounce the jobs. I may live on the other side of the country. There's no point in staying still. They'd rather rent, and also they can't afford the mortgages. A lot of them are free spirited. I don't want to work types. Has anybody met one of those millennials? I don't want to do it. I can't work this hard labor job. This is ridiculous. So there's a lot of that in the marketplace where millennials just aren't making the money to purchase homes. So what they do is, and by the way, they've convinced themselves that they like to live with each other. Oh, I love it. I love hanging with my friends. I love that, they're right in the living room and I can just come out and have this a party every night. There is a more communal community out there growing and saving space when they rent. So we're able to charge more for rent because we have a lack of inventory. So there's some challenges the market faces. There are some solutions out there that I see making a ton of money. Hence camera, if you'd be interested in finding out what real estate projects make a lot of money right now. These may not surprise you, but they're harder to separate from all of the other clutter out there. Airbnb is not one of them. Airbnb is something that's going to be destroyed when the market does correct, because any homeowner can put their house on the market and maybe make their mortgage payments again. So right now we don't have average people, homeowners, putting bedrooms on the market, but Gen X, who's got a baby, a kid grew up and went to college and not in the house anymore, may start turning to Airbnb when they can't pay their own mortgages. And so if you recognize desperate times call for a little education, people start flooding the market, and Airbnb numbers start shrinking, start declining, because a person realizes it makes more sense to rent out sections of their house. And so people who bought property on Airbnb are going to die, not going to be good. Same with a lot of the different asset classes that we see in the market at the moment. Hot ideas that people are coming up with. There's a lot of them, but the short-term rental is the one that scares me the most. The ones I like the most would be assisted living. This is how do we help the old people? Remember the old people who are going to be selling their properties. They are the big generation. All the money sits with old people the next 20, 30 years. That is my belief system. I can't see where else it would come from. So all the money is sitting with the older generation. And even if they don't have cash, they got insurance. And insurance will be paying for the assisted livings, which, by the way, if you look at the biggest companies that are out there right now making the most profits, it's insurance companies, healthcare companies, and insurance companies. And obviously fintech, financial advice, which do you know who the financial planners live off of? Baby boomers, because they don't understand these technical instruments, and baby boomers made all the money. Millennials certainly aren't making all the money, and Gen X is still working. So that it's been the baby boomers who put all their money into the 401ks that financial planners fight over. So assisted living is one of the asset classes that I love for the future. The next one is sober housing or rooming houses. Anything that chops up a unit into smaller usages. The use of a traditional unit of a 3-bedroom fits 1 family is a thing of the past. Millennials don't have kids like Gen X had, and Gen X didn't have kids like the baby boomers had. If you look at society, we've had less and less kids per family, and we've had them older and older in age. And so we have this, it's just an interesting group of people who they also don't commit to shit like anything. Who's noticed, you look at the reports, marriages last that long now, where they used to be a lifetime, but now like in this society, marriage is like, it's optional. You're married, it's optional to stay in a relationship. That belief system has people's wealth getting cut in half every 6-7 years, instead of it staying together and bulking up and people doing well over time because they stayed together. Now we have a bunch of generations who get their net worth cut in half, and massive taxes. There's always tax on a divorce. They're called attorneys. I love attorneys, but in a divorce situation, it's like, oh, holy shit, who's winning here? Just the attorney, only them, the only ones who made out. So this halving of wealth that's been happening a lot stops them from being able to develop and invest. So again, another reason for renting, another reason for single couples needing to be in a rooming house or rent a bedroom. So there's going to be a much bigger demand. By the way, in a depression and a market crash or a market correction, there are more divorces because shit gets stressful. What do you do when shit gets stressful? You don't look inside and solve problems. We do, but outside of our community, they don't. They look outside. It must be my spouse. They're the one stressing me out. They're the reason we can't have money. They're always spending things. They don't work hard enough. And let's get a divorce because now I can get away from this pain point in my life. And they later on discover it's themselves. But in that meantime, they're going to need a place to stay. And they're not going to be renting a 3-bedroom. Hands to camera for catching this. Rooming houses. I like that model. I like assisted living. I like, again, sober housing. Sober housing. The other one I like is dorm rooms, dormitories, housing around colleges. College has got to be the craziest, biggest scam that there is out there. Unless you want to be an engineer, a doctor, that's about it. So all of these other things that people are going to school for end up not bringing in any income, but the government will still loan it. Similar to insurance, right? Think of insurance, how they pay for all of these medical things. Well, we've got Fannie Mae, which pays for all of these education things. So a child or young adult can go out and take a massive loan and get education essentially for free. Well, it turns out the loan gets forgiven later on. So Fannie Mae ends up out of the money, not in the money. So we get a couple of components that, and I think those 4 asset classes allow us reasons to take a normal building and adjust it and chop it up a little bit differently so that we can turn it into more cash flow. Remember, it's more money per floor is the goal that you're looking for in investment. The more you can make out of the same amount of square footage, the better off you're going to be. So I, like Mitch, I still agree with cash flowing assets, but there's one more secret asset that I think is going to be better than all the other assets. And it doesn't take too much money to invest in, and that is your own business. Your cash flow, and if you've noticed this, anybody own their own business? Anybody make money from their own activities? So I assume you probably don't put too much money into that and you get a lot of money out. Does anybody find that to be true? You put a lot of energy into it and it brings out money, but the money, you're not throwing money into it. That could change if you started evaluating your business as the true asset that you have, as long as your business is structured to be market safe, right? So imagine, market downturn, do people still buy your stuff? Some stuff that people still buy in a downturn are Subway sandwiches, right? So Melanie starts raising capital, you're probably gonna be fine, right, Mel? Another thing that goes up during a market crash is liquor stores, right? Alcohol. People are crazy. When times get tough, they turn to things that make times tougher. Why not? And then there are many assets that do well in a market crash. Things that save people money do well. Businesses that save people money. Real estate does well in a market crash in certain markets, like cash flowing real estate. It's a business, right? It's not just an investment, it's a business. That does well. In fact, the assisted livings, the sober houses, those are businesses that have real estate, that house real estate. Other businesses did well. Uber, Airbnb, these came into place because they disrupted the market. They saved people money while people didn't have money. They allowed people not to have a car or not to have to go pay ridiculous amounts at a hotel or an airport. So you're able to save money by using these different apps. So anything that saves money moving into this market will be something that does well. So in your business, don't think about how much you charge. Think about how much you save. Does that make sense? It's not about how much you're charging somebody. It's about how much you're saving somebody. You don't want to be the lowest price. You want a service that cuts out other expenses. Does that make sense? Because I know when I talk about how much you save, people think, okay, I got to drop my prices, be more competitive. That's a losing battle. How can you create a service that saves people a ton of money? Saves them time or saves them money? Those are who's going to win over the next few years, 5 years, 10 years. Services that are disruptive technologies. You've been hearing the word disruptive technology. Yes. We all know what that looks like, or we have an idea what that looks like. EXP for a while was disruptive technology. Tesla, you could say, would be disruptive by far. Yes. Probably the most disruptive technology there is. Genomics is another disruptive technology. Crypto is a disruptive technology. Battery storage is another disruptive technology, eliminating oil and gas. There's a couple of keys that are coming into this market right now. That's why you see me, Mitch, Mike, we're going heavy in lithium ion stocks. Anything that is involved with battery technology, we're buying in, and that's just a commodity. Lithium ions is necessary for all batteries. So you see us acquiring some of that. Crypto, like Mitch said, I love Mitch's reference to gold with Bitcoin, but I think that's a false reference that the crypto community has portrayed so they can create some stability in the minds of investors. If you look at Bitcoin, it's a lot more like Berkshire Hathaway. It's a lot more like Warren Buffett, even though, Warren Buffett doesn't pay a dividend, does he? So it's exactly like Warren Buffett. So he buys cash flowing assets. He has the biggest, highest priced stock on the market. And during a scary time, everybody goes over to Warren. But just like Bitcoin, when the market crashes, Warren crashes too. So it's a lot more like, because gold does not crash in a market crisis. Gold just stays gold. It stays about the same. For the last 5 years, it stayed right around $1,000. Hasn't moved much. Market's gone up and down. Gold's stayed about the same. That's because it has about $16 trillion in its market cap. $16 trillion is hard to move, hard to fluctuate the price on something. So clearly investors believe in gold more than they believe in Bitcoin, which only has a 600 billion market cap. So it's not even at a trillion anymore. It did hit a trillion at some point, but it's pulled back since then. So when we think about stability in the markets, Mitch is right. I like Bitcoin as far as crypto goes. I like Berkshire Hathaway as far as stocks go, although I'm not feeling bullish on it. It's still done very well over the last few years. Not a stock I'll buy or invest in. I invest in slightly more disruptive technologies, like I said. Lithium, I take the risk on that. But for investors who don't have a lot of cash, this is a very good time to be building up business. Sales is the skill for the next 5 years. For investors who want more cash, sales is the skill for the next 5 years. For investors who are looking to raise other people's capital, sales is the skill for the next 5 years. And so you'll be hearing me talk more about sales. I'll be seeking out coaches for sales to share with everybody. If there was one magic strategy that I could use, that I could give you to survive any market crash, any market correction, any bankruptcy or terrible situation, whether you were facing divorce or you were facing, the only thing I can't stop with sales is death. All the other calamities in the world I can solve with sales. Your wife's leaving you, sell her on you again. Sell her on us again. The government wants money from you. You didn't pay your taxes. sell them a reason to go into a payment plan. You got to sell them. You got to give them something to work with. In a court case, and your partner says that you took advantage of them, sell them on a new strategy to build something better together, or a payment plan to get out of it, and then go and sell up something. Sell a product that brings in money. Sell an idea. Sell an investment. Sell a building. Sell, 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 sell. You sell, it'll get you out of hell. If it rhymes, use it. Go ahead, Mitch. You got your hand up. Is that a high five for sales?
And as a hand up, it's both. You were in a zone. I don't want to interrupt. Actually, I can touch on the sales thing, but I also wanted to share some real estate related data after you kind of, gave your whole overview. Before I jump into the real estate thing, since we're talking about sales, yeah, people have been pinging me given this crypto market. So there will be a crypto workshop coming up on June 1st. So there's some selling for you. That's the big 2-hour workshop. Some of you guys that are in Alchemist Mastery took part in back in, I think that was October, November we did that. So be somewhat similar in terms of the fundamentals, but obviously with current market analysis and whatnot. Wednesday, June 1st, 7 o'clock. We'll spend 2 hours breaking down crypto. And also at 7 o'clock today, I'll be jumping off. I get the free crypto call that I do every Tuesday at 7. So if anyone needs a refresher on crypto wallets and things like that, feel free to jump on after this call. Circling back on real estate. So all the stuff that you were saying, I agree with. But then there's the other side of the coin. So think about this. Interest rates have gone up. Everyone thinks interest rates going up is bad for real estate. Yeah, but you know what also happens outside of people getting priced out of homes? People don't sell homes. Think about this. And I have 3 friends that I know are doing this. You were thinking about selling your house and upgrading to a bigger house, but you're in this house with a mortgage at 3%. You're going to now sell that house and buy another house and get into a mortgage at 5.5, 6, 6.25. A lot of people are hesitating. And I personally know 3 people that changed their game plan, are not going to sell the house they're living in. They're going to stay in the house they're living in, because why would I get rid of my 3% interest rate? I'm never going to get this interest rate again in my life. So what does that do? That pulls potential supply off the market. What do we have right now? A supply demand issue, right? Now, interest rates going up are starting to slow down some of the demand, right? Because of affordability. But on the flip side, interest rates going up are also to an extent constricting supply. So when does the supply demand, dynamic flip, right? And on top of that, when it comes to supply in terms of homes being built, we're still behind the curve. We've been behind the curve for 10 years. And builders, like Walt said, builders might start pulling back, right? So is that going to make supply better or worse? It's going to make it more of an issue. So this is why I'm surprisingly not very bearish. Do I think things are kind of bubbly? Yes. Do I think we're not going to see prices people talk about I'm seeing price cuts. I'm like, what kind of price cut you're seeing? You're seeing the idiot that a house just sold for $350 2 weeks ago, and they're listing it for $380, $375, thinking they can just keep jumping market nonstop, right? And then what happens is price cut, they end up selling at $340, $350, and we end up in the same place on that increase we just got, a month, 2 months earlier, right? We're just starting to see that. We're not seeing a drop in prices yet, right? We're seeing that happen, a drop in people trying to raise the market and not being able to do it anymore. So I'm paying attention for when the market goes sideways, which it always does. If you look at any chart of, market cycles to real estate, it literally looks like this. It goes, it does this little wiggle top, and then it finally turns and goes. That wiggle top is 1-2 years worth of time. So I'm looking to see if 2023 is going to be like this sideways year. And if it is, then it's all right, 2024, here we come. Maybe we'll start getting some prices coming down. But again, it goes back to that supply demand dynamic. And, Walter talked a lot about that in terms of the generations, right? And I agree in terms of the baby boomer generation. The millennial generation is buying more homes than I think any of us realize. If you really dig into the data, they're actually more home buyers than we think they are. We're giving them less credit than they deserve. And trust me, I'm the biggest hater there is when it comes to that generation and buying homes.
Found that as well in my research. There's a lot of millennials buying. 36 is the average age to buy, and they're right at that age.
Yeah. So I'm with you. I think we have an opportunity to be very well prepared for an opportunity. I personally don't think that opportunity is coming for year and a half, 2 years, who knows. And again, the economy affects that. We don't know what's going to happen with the economy. We don't know what's going to happen with the stock market. So that's just my 2 cents in terms of what the data shows and the trends. There's a lot of quote unquote positive side things in terms of the supply demand issue not being solved. And in the end, everything comes down to supply and demand. You're not going to see prices go down until you get a flippening in supply and demand in terms of for any extended drawdown, like we saw obviously in 2008, 2009. So, and plus all those people that were in forbearance all have equity in that property. No one's underwater.
Yep.
So we still have to get to the point where people are underwater. So when does that happen? 2025? And that's more so single family. So in the end, it goes back to buy right, make sure it cash flows, who gives a damn what the market's doing. But I'm going to definitely have some cash on the sidelines for potential buying opportunities, year or two from now. So that's
And
just.
I'm 100% in agreement with everything Mitch just said. That wiggle top is exactly what, like you said, it takes about a year, 2 years for us to see that sideways movement. And I believe we're going to start seeing a little bit of that in 2023, 2024. This activity we're seeing right now, I think we've seen the top of the market, and we're going to see just a little bit of resistance now when anybody tries to drive the price back up. So this could be the beginning. These are all of the signs are starting to fall in place. The average consumer debt is at the highest it's ever been. So people are walking around with more credit card debt than they've ever had at any point in our market history. And we're just sliding right into all the factors line up. But again, it takes a while for this market to turn, but it also takes a while to flip property. It takes a while to sell property. So in this market, all transactions should be focused on cash flow, because it's very easy to get stuck and forget where you're at in the market. And it's very easy to call it wrong. And like Mitch was just saying, at any point, a black swan event could occur and the market suddenly falls out from underneath us, because we're right at the point of a weakened market. Pretty much anything could hit and take the market out entirely. This is the time to be very cautious. Right? These last few years, Ron and I, by the way, we're not blind to the fact that the market is still hot. Like, we put a condo on the market a few months ago. It sold for 155. We just got an accepted offer on an identical condo for 185. So like, we still see the prices rising in our market, but these are the final days of that. We have a 2-year sales schedule for our portfolio for the things we're selling. It's not, let's sell everything today. It's again, dollar cost averaging out of the market. So this is the time, if you know you're dispositioning property, you can have the next 2 years to disposition that. For us, we're very concentrated in one market. Mitch, I know you got to head to your call. If somebody wants to jump onto the crypto call, you're going to be dropping a link.
I dropped a link into the chat for the workshop. I want to obviously get that also on Alchemist Nation. So I can drop my link, or if you want to create a Alchemist affiliate link, I'm fine with that. Either way, we'll get it out there. We'll be good to go. And I'll see you guys out on the interwebs, as I always do.
Let's give Mitch Jaworski a round of applause. Thanks for jumping in tonight, brother.
Absolutely. Hopefully I brought a little sunshine from all the rain that Walter was dropping.
Yeah, man.
I love you guys. Thank you so much.
All right, later, brother. So tonight we'll recap. Best assets in real estate are going to be cash flowing assets. We've always said that, but you'll see me talking less about flips unless I'm talking about flipping cash flowing assets. A lot of what Ron and I have always done has been buy multifamilies that we could sell, and we've purchased them at a 20% discount. This is the strong suggestion. A lot of you and a lot of other investors have done really well following other strategies over the last few years, because the market has just made things easy. It has made people lucky. It has covered mistakes. It's a lot like joint compound and paint in a house, right? They hide a lot of sins. They hide a lot of mistakes. In the next few years, our strategy will be the most effective strategy. This is buy with a 20% discount on multifamily property with a 20% opportunity for a value add. So you can be in the property at a 40% equity position and then raise rents for the next 3 to 4 years, putting you at a further advantage, another 11% equity. So within 4 years of the right purchase, even in a downward market, if the market drops 20%, you're still in a 30% equity position. Hands to the camera if you know that's the right way to buy right now. That makes the most sense. All the other strategies end up with a losing scenario. So you want to be buying with the equity in place, and you want to still have that forced appreciation play available. This is not the time to be buying A-class property. We all want the nice stuff. I know it's beautiful and it's a great idea to own. It's a nice thought to have. In a down market, pick up the A-class. Hell yeah, of course. In 2027, 2028, when we're crusting the bottom of the crash, that's a great time to pick up all the A-class. It'd be beautiful. The cycles are big. The swings are big. Over the next 5-6 years, Ron and I have had this conversation. If we didn't do a single real estate deal, but all we did was build our network, build our relationships, build our sales skills, build businesses that are worthy of people, save people money, save people time, then when the market crashes, we could buy everything. Even if the market, and this is the other side to it, if the market 10x'd, it went up even more over the next few years. And there was no market crash. 20 years from now, still no market crash. If we focus on building relationships, over the next 3 to 5 years. If we focus on selling great products and programs, businesses always out cash flow real estate. Business, and Melanie will give you an example, right? Melanie, your Subways, based on how much you put into them, based on how much you put into a similar size multifamily, your Subways are always going to outperform the real estate in terms of cash flow. So it's the same concept in what we're doing over these next few years is focused on your business, focus on assets. One product that we're releasing that's going to save investors time and money is Alchemist Leads. Alchemist Leads is a CRM that replaces ClickFunnels. It replaces Active Campaign, skip tracing softwares. It replaces all other CRMs, replaces Zoho, so database management softwares that do surveys. There's dialers, Mojo Dialer replaces the dialers. There's a lot of social media scheduling shit. It replaces a lot of stuff. So for $97 a month, you can save anywhere between $300 to $600 a month. So this is the sort of work you'll see us spending a lot of time on, is how do we save people money through great products? Is assisted living a business or real estate? That is a business that owns real estate. Assisted living, every assisted living has like 25 staff members. It's a little different from just hire a property manager. They're definitely businesses. Assisted living, sober houses, rooming houses, those are businesses. They involve staff. Maybe a rooming house, not so much, but the sober houses, the assisted livings, especially assisted livings, they're heavy businesses. So you're going to require more leadership skills, more culture skills, more business system skills in order to invest in these assets, turn them around if you were buying them, or to create them if you were investing. Awesome. Yeah, you're very welcome, Jillian, and love seeing you on these calls. It's so cool to see the community staying together and learning. I know that there aren't more people here because I didn't market it very well. So my fault, shame on me. I did save it. My VA is going to chop all this up and make it nice and available for everybody in the shorter version, shorter format. So we'll be able to post this on alchemiststation.com. You'll be able to share it with your friends and your family. If you're concerned that you can't articulate it very well, just be like, hey, watch this video. You let me know what you think. And then you have a conversation with them. The next few years, ladies and gentlemen, sales. It really is sales. It's sales, it's marketing. Have a great product that saves people money or saves people time, and sell it, sell it, sell it. I mentioned at Mission to Millions, a phenomenal product. You give me $25,000, I give you $250,000. If you can come up with something like that, people will buy all day long. Does that make sense? I know Melanie's like, fuck, you selling that? Is that a thing? You're gonna do that? Coming soon. I have been mapping it out, and I do believe that it is actually something that is actually possible. I said it, live as I was giving an example of creating such a fantastic product that people would be dumb not to buy it, a no-brainer product with a no-brainer offer. But I do actually believe that we could, for $25,000, go and help people lock down properties that would have at least $250,000 equity in the deal based on our strategy. If we go with a 20% equity position, even if we fuck up, we go with a 10% equity position, we have a 10% value add. All I'd have to buy something at is 2.5 million. Well, something that would be worth 2.5 million. That 20% is $250,000 right there. Shit, 10% would be $250,000. And Scam, if you're catching this, I don't have to work too hard. I just have to be decent at what I do. I do a 40% purchase, a discount. So this would be a 10% discount if I go big enough. So it's, and then all I'd have to do for a capital raise is about $500,000 capital raise. If I can't teach somebody how to raise $500,000, I'm not a hell of a teacher, am I? But by the way, that's sales. Learning how to raise capital is selling. And that is what I want to focus on these next few years. I've been a real estate coach, but real estate to me is going to be very hard to sell these next few years. Teaching people to buy real estate is not congruent with what I believe is the right investment for somebody new getting into this. For anybody in the community, yes, obviously ask real estate questions. Like, obviously, we're going to take you guys through the process and get you your real estate. But for people I have not already walked through the process and taught and haven't been through the mentorship, I don't believe that is the right angle to be bringing people through. We're going to adjust a lot of what we do in the jumpstart and the mentorship to be focused on sales, reviewing your product, reviewing your messaging, reviewing your marketing, and making sure that your sales message is appropriate, making sure that when people talk to you, they want to hand you money. When they come to a conversation with you, they're gonna be like, Manny, just take the money. Whatever you got. Like, I don't even I want what you're selling, bro. And just take the cash. That is the new goal for the mentorship and the jumpstart over the next few years, is going out and crushing hard in selling and just creating our messages, creating our USPs, creating our taglines, and really selling a great product. It's really, man, it's about the quality of product. Right. The great product practically sells itself. You just got to schedule the appointment and answer a few questions. A great product. That's what we want to be working on these next few years. If you don't have one, find one. And I will be building a few. I'll be attracting people who have great products and doing my best to connect with people who have something amazing that you could plug into. I believe that over the next few years, this is how we build millionaires, is teach people how to sell great products and then invest those cash flows into great projects, great properties, businesses. So we are committed to building millionaires. Obviously, we don't rock the cup for no reason. We're on a mission to build 100 millionaires who are inspired to build 100 millionaires. To our millionaires, we want to make sure you keep it. We want to make sure it keeps growing. There is no reason why in a sideways or a down market, we can't keep increasing our net worth. Remember, there are companies that came out of 2008 and exploded, just grew, took market share. Amazon's one of them. Tesla's one of them. Airbnb, like I mentioned earlier, Uber, these companies, look and do the research. I have fun with this stuff. I like to go back and say who did well in 2005, who did well in 2006, who did well in 2007, who did well in 2008, because that gives me a clue as to who will do well over the next 5 years. So you may want to take some time and do that research. And you may want to, if you have any negative feelings around sales, this may be a good time to revisit that and say, it's okay to sell. I don't mind selling. In fact, I'm a great salesperson. If you've ever said in the past, you're not a good salesperson, recognize that as a lie. It is time to change that opinion of yourself. You are a great salesperson. I'll tell you how I know. You sold me on you. I'm not easy to sell on people, but you did sell me on you and your possibility. Otherwise, I wouldn't do the calls. I wouldn't make the time for anybody other than somebody who I believe is capable of becoming a millionaire, capable of supporting their family and others and motivating people to do what they're doing. So you've been somewhat successful, but we're not dead yet. This is just the beginning. Any level of success you've had, just imagine a 10x return. There's so much more success that is out there for you and for the people that you connect with. I say this all the time. We're just getting started. People think I've done well, and I look at what I've accomplished, and I see that as just a very small piece of what we are accomplishing, of what is possible, because I took the last decade learning. It really was. The last decade was just education. And this next decade is where we really explode. Even though the markets are going sideways and downwards and, all over the place, we can do very well because we respect cash as a position, right? By the way, cash is good, but we also understand leverage properly, how to leverage properly. We understand where the cash flow comes from. And cash flow does not always come from what everybody says it comes from. It comes from proven experience. If you're acquiring businesses, be looking at the cash flow statements. If you're acquiring real estate, be looking at the T12s. You want proof this thing makes money. Look at tax documents. Show me the last 2 years of your taxes on your business. Show me the last 2 years on the taxes on your property. Oh, we have cash. Well, I don't count that in my evaluations. You either take my offer or you don't. I base my numbers on what you tell Uncle Sam. If you can't be honest with him, why should you be honest with me? Does that make sense? Only do deals with honest people. People do things morally, ethically, and legally. And if they don't want to follow the rules, then you have to have your own set of rules in place. And there's nothing better than tax documents. So, ladies and gentlemen, we're going to let everybody go for the night. I've got a crypto call with Mitch. We do our crypto mastermind at 7:30, which we have paid significant money to be in those calls. So I don't want to miss anything that he says in there. So cheers to your success. If you have any questions, you got access to me. Send messages on Alchemist Nation. When you have a choice, always work with the best. Good seeing you guys. Cheers.